Hi Scott, it's Shelley with Woods County.
Hey Shelley.
The board's here, we're going to get started. I've got to get my recorder going though. Hang on just a minute.
Sure.
And
Hey Scott, this is Bob. We'll call the meeting to morning. We'll call this to order and then have everybody introduce themselves. And then I think we're ready to go. It is June the 11th at 8:33 a.m. Calling the meeting the Woods County Equalization Board and doing a roll call now. Chris?
Here.
Joe Shirley?
Here.
Bob Seaver here. And then we also have Benjamin Fernley
Renetta Benson, Woods County Assessor.
and Miss Shelley Reed.
yes, Shelley Reed, Woods County Clerk.
Okay, so let's
And I have received all of the affidavits from
Okay.
everyone.
okay, good. Okay, so let's commence this hearing. Scott, you're up, sir.
Okay, I appreciate it. Certainly appreciate the board's time this morning, as well as the folks from the county. Let me start by saying, we issued or part of our renditions, we prepared kind of a cover letter to summarize the activities we saw in 2019. We obviously, we saw some headwinds with 2019, had some asset sales that established a market value. In there we indicated we didn't really have material capital spent during 2019. Saw some price declines and volume reductions specific to our assets there in Oklahoma, but obviously specific to each county. So we wanted to get ahead of things and file that so there's no surprises. What we didn't establish was taking into account 2020 activity. We didn't influence our values based on pricing we saw in 2020, which is obviously declined dramatically. The oversupply and the effect on volumes there, the production cuts by our producers, and still everything that kind of goes into the financial results of the assets. So again, we kind of kept things specific to 19 and said that's what happened and that's what we're kind of rendering our values based on. There's enough activity, I guess negative activity that, if any of the board folks have interest in wells and so forth, you'll see that. I mean, you've seen it in your decreased royalty payments or interest payments over the last, definitely the last year, but over the last few years. Looking ahead, we did settle values with Woods County. Actually, just recently, we settled most of the prior, I guess all of the prior year tax years, and that was basically, we didn't have an expert report in for Woods County, neither did or to my knowledge, the county didn't either. We based the settlement on the facts we saw. We settled, the recent years. 2019 was a little bit lower than the prior years. It was based on 18 results, which were worse than 17. Prior year to that, it was worse than, the last year. So, we're seeing a trend, and I'll speak to it a little bit as I talk about income and so forth. But we have to reach some settlements. What I will tell you is, I know that Ben will point out, oh my gosh, these guys, their values dropped off a cliff for 2020, and how could they do such a thing? Well, the facts changed in 2019 compared to prior years. I mean, like I said, we had asset sales, we had still reduced volumes, reduced revenues, etc. What we're tasked to do is to come up with a fair market value when we render our assets. In all the data we put together, that's what we've tried to do. I can't sit here and say I'm an appraiser by any means, but given the facts that I know, that's the value we came up with. Kind of thinking about that, when we come up with our opinion of value, we look at the Oklahoma Tax Commission guidance. They issue a publication every year. It's updated. folks at the state you guys live in put that together. And so we say, well, if it's applicable to the state that the assets are located, then we should probably follow their guidance. So they indicate that we should kind of look at any comparable sales, the cost of the assets, the income generated by the assets, and so that's kind of what we've looked at. Specific to the cost, in Woods County, we didn't have any asset additions in 2019. Really nothing's been added since 2016, and at that point, we only added, I think it was a meter, and it was about $27,000 per task's replacement cost. So in Woods County, there's no capital being spent, hasn't been spent, and you really don't expect to spend anything there in the near future. So it's not a county or a set of assets where we're going to invest any additional dollars. What we see that concerns us about the tax roll or the cost approach that tax uses is their pipeline costs are at a premium to the Oklahoma Tax Commission pipeline cost schedule. I would say approximately 13% higher. So there's a pretty good chunk of value that they're always going to be higher than we will. Idle pipe, the Oklahoma Tax Commission says it should be discounted to 80%. I think there's a few items on the tax roll that might be discounted, but certainly not down to that level for abandoned or idle pipe. And they use 30-year lives versus 26.5-year lives. So again, they're coming up with what they believe the value or their opinion of value is. I'm just saying these are differences and why we're apart. One of the biggest concerns that we have is on a cost approach. It's clearly stated by the Oklahoma Tax Commission and appraisal methodology is you take into account obsolescence. You use the RCN or the replacement cost due. You subtract out depreciation, which is a physical deterioration of the asset. Obviously, assets don't last forever, so you depreciate them, and then you adjust that number or that value for obsolescence. And you say, my gosh, what is obsolescence? Well, it's basically an external, can be an external factor to the assets. It's pricing, it's market demand or supply, it's any legislation, it's everything that I don't have control over on how I operate my assets. As I mentioned, pricing is down quite a bit, demand is down quite a bit, so there's a lot of obsolescence factors there. You say, okay, well that explains what it is, but how do you know how much it is? And I point to probably the easiest way to look at it is either utilization of your assets or by looking at a cap rate. From a utilization standpoint, we look at boosters. I mean, boosters is what really moves volume on assets, gathering and processing assets like we have. We're at no better than 50% utilized on boosters. That's down just about 14% from last year. So it's certainly trending in the wrong direction, but at least it says there's obsolescence there. The other, I mentioned cap rate. Cap rate is used to estimate the potential return on an investment. So, the Oklahoma Tax Commission, again, kind of using their guidance, says these type of assets should be at about 11%. Our return on the assets in Woods is just under 2%. So we're not making about 9% return. That's missing because of it's either the inefficiencies of the asset, it's the pricing of the commodities. All these factors go into why you can't make or why you didn't make, I guess, a rate of return of 11% as per the guidance. And so when you say, okay, well, 9% divided by 11, it's about 84%. So 84% is what your obsolescence number is. You apply that to the total cost, and that drops the value significantly from where task is valued at. So that's kind of our how we look at the cost approach. When you look at income, say, well, how is this declining, or what drives the revenues? Pretty simple. It's price and volumes. Volumes are down over 18% year over year, and pricing from 2018 to 2019 was down 26%. It's mostly natural. I mean, that's a natural gas price. That's what we're making. That's what we're doing. It's natural gas. So pretty good index to look at. So again, we looked at just kind of the trend, because I think it's relevant to establishing value, and look at income. It's what's sustainable, or what's your typical income. Our revenues have dropped from just under 18 million 5 years ago to just under 4 million this past year. So they're down about 78%, and volumes are down about 57% over that same period of time. Ironically, the value in Woods County, had we not had those recent settlements, if we just said, yep, whatever the value the county throws out there, we're going to accept, it's only down 5%. So all of these factors have not been considered when establishing value. The kind of what I mentioned earlier was, one of the other things to look at when establishing your value is market sales. Has there been any comparable sales of assets in the space? There actually was in 2019 on no more than 100 miles from you guys, over Logan County, Oklahoma County, Payne, Lincoln. There was a gathering system over there that we sold. It's kind of, unfortunately we can't do, like when you assess your house and you look within, a half a mile, unfortunately there's not gathering plants, that close together. So you kind of look at what you've got to base your comparable sale on, and that happens to be the closest one to where we're at. Was there more? Yeah, there was more. There was one up in southwest Kansas, and then one in the Panhandle of Texas. They're not as close, but I think they're still comparable sales. We feel like these assets that were sold were certainly the best indicator of a fair market value. I mean, the system that sold in east side of Oklahoma closed on December 30th. Well, that's as close as you can get to January 1, which is the assessment date. So, for those assets, we looked at it. Those are ECP assets. They're not a peer company. We know what the terms were. We know what the makeup of the asset was. We have provided the asset, the sold asset list to task. I believe they've updated the tax rule for that, so they certainly know which assets were sold. We've noted that the sale, in general terms, that we've put that in the cover letter we sent to all the assessors. What we did find was that the sale price of those assets was 75%, approximately 75% less than the historical assessed values of those assets in those counties. These aren't fire sales; they're not distress sales. We turned away offers that other companies had made. Took some time to sell these assets. They're all different buyers. They're not a related party or affiliate company, and they are the same makeup of assets as in Woods County, in pretty much every county in Oklahoma, because the assets are very similar in that footprint. So we feel like it's a pretty darn good distinction of a comparable sale. So we basically said, we know that those assets sold for about 25 cents on the dollar in comparison to the assessed value, and in a rough calculation, that certainly drove our valuation lower. We actually talked about I'll extend it a little bit. We actually talked about this sale a little bit, actually just yesterday in Logan County, which is where the assets were sold. We sold about 50% of our assets in Logan County. You have to bear with me a little bit on numbers here, but 50% of the assets in Logan County. The 2018 value, the 2018 cost that Task had assigned to these assets was about $160 million. After the sale, the cost was about $70 million. And I'm rounding these numbers, obviously. So they basically took $90 million out of the tax roll. That's on a cost basis. When we look at the value of those assets went down $1.25 million. So $90 million of cost equals 1.25 of fair value. Just did a quick calculation to see what percentage that was. If I calculate or use that same percentage to the assets in Woods County, they're saying that right now you've got about $56 million worth of cost associated with the assets there. If I apply that same percentage, the value reduction for the sale, I get a value of about, I'm going to say no more than $100 million. No more than $1 million. It's like $935. I rounded up to $1 million to make it easy. There is a contract associated with some gathering with the buyer. It's a 10-year contract. The value that DCP is associated with it is $2.6 million. That's gone through our executives and they've approved that. So I don't have any reason to doubt that that's a fair number. If I divide that 2.6 by 10, it's about $260,000 a year. If I add that to the million, I'm at about $1.3 million on total fair market value of these assets as it relates to the assets in Woods County. So I know that Task is sitting there at $12 million, again rounded. They're up 6% or just under $700,000 for the year. So I guess to summarize, we've rendered our fair market value based on multiple market sales that show that values are about 75% overvalued. We've continued declining earnings, as evidenced kind of by those volume reductions and revenue reductions that I talked about. There's weaker prices. The assessed value, we believe, is clearly not reflective of market values. Taking into consideration kind of all the facts that I've spoken to and kind of the numbers I walked through on the sale, I have no idea how the county's value would have increased $700,000 or almost 6%. As in prior tax years, we're certainly open to a fair settlement. In tax jurisdictions, this year we've already settled some asset values, the 2020 values. But where we're at is the facts that occurred in 2019. I feel support DCP's position and value, but they certainly don't support the county's increase in value. So I can certainly take questions now. We can wait for Ben to go and answer questions then. So I'll throw it back to the board at this point.
Scott, this is Bob. First, I got a couple comments and then a question, and I'm sure these other gentlemen will. First of all, very well laid out presentation and articulated. Good job.
Thank you.
Secondly, or the question is, you mentioned, was that net revenue of, or net income of 5 years ago of 18 million versus 4 million present? Was that company-wide?
No, sir. That's our, and I'm gonna say that is Woods County based, and that's a revenue number, not a net income number. I do want you to understand that we do our best to get down to a county revenue and volume level. If you're familiar with obviously pipeline and the way that our company or industry runs, I can't put county lines where we're operating and say that volume or value stops at the county line. we have to do a little bit of allocation here and there, but we feel pretty darn comfortable that we've allocated appropriately based on the facts of the boosters, meters, pipeline, etc. So, in summary, yeah, I mean, the revenues, I'm speaking specifically to Woods County when I talk about really any of the factors or values that I've given you today.
Okay. Hey, again, well prepared, and I'm going to turn it probably to Benjamin.
Sure. Thank you very much for the board's time. I appreciate it. From the county standpoint, I'd like to address a couple of things that Scott covered with you. First of all, the OTC puts out a guideline. It's for us to use as a guideline, not a Bible. And so we certainly use it that way. He talked about depreciation life. They use 26.5. That's an accounting depreciation. We don't recognize that. We recognize 30. I know the OTC also uses 26.5, but look, it's pipeline, and I think it's pretty standard in the valuation business to value it on 30 years. Certainly it lasts longer than that in most cases. Not all cases, but in most cases. Scott talked about the sales, and we don't have that specific information. He talked about they submitted a list of assets that they sold, and we did remove those from their tax roll and added it to the buyer, as they stated. But as far as the financials and all that stuff, that would kind of give you some good information on the sale, some really good information on the sale, we don't have that specific information. Just to kind of cover that Logan County asset that he was talking about, and he was talking about last year we had it as a replacement cost new. And you can look, if you turn to the second page, it's Exhibit 2 of 6, and you want to scan up to Logan County, you can kind of follow along with where I'm at on some of this stuff, but some of it's not available to you. He was right, it was about 160 million replacement cost new last year. I had 158. He had 70 for this year, and I had 68. It's the same difference. What we see, at least from a valuation standpoint, is the fair market value on that last year when it was replacement cost new of 158. Our fair market value was around 19 million. It was 19,398,000, and you can look at Logan County and you can see that number for last year's values. And this year's replacement cost new is 68 million, but the fair market value is 18,299,493. Now we adjusted it down a little bit, but just for exhibition purposes, I'm not going to go into it. But look, from that standpoint, it looks like they sold a lot of assets. He said 50-something% of the assets. They had very little fair market value. It looks like, from a valuation standpoint, that they were old, and they were probably already at the floor or below the floor in value. And that's the assets that they got rid of. What they kept was the new stuff, and so it didn't have as much depreciation, and that's why the fair market value is not, you don't see a lot of difference in that fair market value. Now, specifically, we would know the answer to that question if we were provided with some information on the sale. And that's all I got to say. There's a purchase price allocation somewhere where the seller and the buyer agree on what assets are being bought and sold and what they're paying for each item. There's also an IRS Form 8594 that is submitted to the IRS by the seller and by the buyer, and that form would tell us exactly the purchase price. Those are things that are important when you talk about value of assets. So we do see things a little bit differently than DCP as far as that's concerned. He talked about volume drop. We're in the mid-continent region. We look at it kind of as a whole. In the mid-continent region, over the last 5 years, we've seen about a 4% year-over-year drop in volumes. That's all. Now, specific to this county, I don't have that information. So, that's what I have to say about that. So, let's go back to this 2 and let's kind of get on with this show here. Last year we were at 11,343,393. This year we're asking the board to affirm our value of 11,999,962. Is everybody with me on that? I've highlighted it for you down there on the bottom.
Yes.
So last year, this year, We talked about assets. Well, when you look at assets, if you'll look at page 3 and 4, that's going to give you kind of a summary of 19 and the assets and what school district they're in. And you look at 20, there have been a few adjustments. He doesn't call them adding. I really don't call them adding either. In the oil and gas business, we move compressors around. We have to. We have sizes of pipe somewhere that we decide we don't need a 3-inch piece of pipe. We need a 6-inch piece of pipe, and we replace that pipe. And there's a couple examples if you want to look at page 3 under the Winoka School District, just as an example. You see that 3-inch pipeline? It's the second line item down. There's 7,589 feet of pipe. That was in 19. There's also 134,809 foot of 6-inch steel pipe. Now let's flip over to page 5. The same school district, this is year 20, that same 3-inch pipe, now we only have 448 feet of pipe, and we only have 103,496 inch pipe. So there have been some adjustments. There's also some compression that has been rendered. It's either rendered differently or we accounted for it differently in the county. And we make those adjustments all the time. What I submit to you today is that those little adjustments in assets in the county that have been made per the rendition of the taxpayer has increased their market value a little bit more than the depreciation they would have seen. And that's why you see this small increase in market value from last year to this year. That's the explanation. I would be glad to answer any questions the board has, and I would again get back to what we're here for today is to ask the board to affirm our fair market value for 2020, $11,999,962. Before I close, just for the information of the board, let's talk about those settlements that we recently had. That was on March 11th, I believe, of this year for tax years 16, 17, 18, and 19. In 16, it was agreed upon that the assets were worth $12,798,524. In 17, it was agreed upon that the value of those assets were $14,913,362. In 2018, we agreed that those values should be $14,225,909. And for 19, that's an agreed upon value. It's on that sheet right there. It's $11,343,493. And we substantially haven't changed the assets in this county. We're in a pretty good hotbed for oil and gas in the Mid-Continent region, in my opinion. Are things great? Oh, they're probably not the greatest they've ever been, but they're not the worst they've ever been either. And so we stand on our valuation. I'll be glad to answer any questions anybody has.
I got a question. What's your cost of transportation per MCF?
Scott?
Oh, yeah, sorry. I didn't know that question was for me.
Yeah.
Cost of transportation per MCF, I don't know off the top of my head. I mean, we've got too many contracts. I don't know if I just don't have it readily available with me.
Well, I'm sure that it hadn't gone down any, right?
Well, it's not just about transportation, though. It's about the gathering. Transportation is on pipeline, and we do have pipeline not through Woods County, but the gathering is based on a volume times price, where that price is going to fluctuate based on index pricing. So it's not a fixed rate that we see, for the perpetuity of time. I mean, it definitely is it'll fluctuate with the index.
Well, I'm pretty sure your contracts with your producers have a set amount of costs per MCF for transportation for delivery to the Haven pipeline or wherever you're out outflow is here. What, you can't tell me what your cost of transportation is?
Well, I mean, we have hundreds of contracts, so.
Yeah, what's your average cost? What are you charging?
I have no idea. I mean, unfortunately, if I knew this was going to be a question, I could have got it ready. But I have no idea. I mean, I'm a property tax guy, not a commercial guy, but I can tell you that at the end of the day, most of these contracts are POP contracts where you use a weighted average selling price, and that sales price changes. If I'm on our interstate pipeline, certainly the contract's going to stay, the fee will stay constant. But even at that, I just negotiated with the Oklahoma Tax Commission on our Southern Hills pipeline. Even though we have a stated rate in our contract, we have shippers coming to us asking for reductions because the volumes are declining so much they can't make money shipping. So even though we charge 4, 5, 6, 7% or cents per volume, they may get a break because they're not making money and they'll pull their volume if we don't work with them. So even though it's a contract, I would say there's discussions going on that would change the terms. I mean, we're trying to negotiate terms all the time.
Yeah, are you looking at, when you evaluate the gas production in this county, are you looking at the reserves that are there, or are you looking at only the cash flow, which would indicate that a lot of producers have shut their gas off because of the price? So that doesn't affect your value of your pipeline. It's still going to recover volumes whenever those wells are put back online.
Right, but and I don't disagree. I mean, if you're right, if production comes back, then yeah, maybe the volumes and the revenues that I've talked about will increase. But again, we're talking about the 2020 value, and what I saw as data leading up to that assessment date indicates that we're down quite a bit, and it's due to producers curtailing their volumes because they're not gonna process their volumes for pennies on the dollar of what they used to get just in the last year. I mean, like I said, the price went down 26% from 2018 to 2019. It was down at least 30 to 40%, depending on which day you look at, in 2020. So as a producer, why would I deplete my reserves for pricing like that when I can possibly hold on? Unfortunately, I don't know. Obviously, that's a crystal ball, and who knows when prices and demand will increase. But it's not currently. And so what we've seen in 2020 is volumes decreasing quite a bit. And to Ben's point, I get it that Oklahoma was kind of a little bit of it has been a hotbed, scoop, stack. Okay, sure. Things are going nuts. I would say for us it hasn't been, and I've seen rig count declines that have been published. I mean, this is public information that say the scoop and the stack rig count wise is down at least 70 to 85%. So again, that's a 2020 factor when you compare it to 2019, but it shows you what's coming because if rigs aren't in the ground, then production is not going to increase, and you'll see further declines in these volumes.
But bottom line is your transportation cost has not changed.
I wouldn't say that.
Joe, any questions?
As far as I'm concerned, we just affirm what task is done. I see we have no choice here.
That's a motion.
And I would make that a motion.
I'll second that.
All in favor?
Aye.
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 Motion carries.
Thank you, Scott.
Yeah, hey Shelley, can I have you just email the 977 just kind of given the times, it would just be more efficient that way.
Okay, sure will.
Thank you, I appreciate that.
Uh-huh,
Thank,
no problem.
and I do appreciate the board's time today, to listen to our protest. We'll kind of take it from there.
Thanks for coming so well prepared.
Thank you.
Yep, absolutely. Thank you.
He, was pretty well prepared.
I'm sorry?
He was well prepared.
Yeah.
I mean, it went on a little, I think Joe down there, but it went on a little
He
long,
is
but
redundant, went on and on and on about the same old crap. I'm sorry, I'm cut to the chase kind of guy.
Well, I hope I had to address a
You
few
did
things
well.
that he said, I'm
No,
sorry.
I agree with what you
And
Yeah.
when we talk about those sales, those assets, that's critical that we get that information, because just looking at it from us, if you just look at it from the outside, you're gonna go, wow, what happened? They went down from 168 to whatever those, 158 to 60, whatever the difference, the $90 million he's talking about, but the fair market value only went down
Come
1.25.
on,
That's because it can only be that, because it doesn't matter if that 6-inch piece of pipe is here or there or anywhere else, it's plugged into a formula. So what they kept, when we plugged it into the formulas, was all the new stuff. That's what they did. And that's why the replacement cost, it's not as much, but the value is still there.
Well, you
because
can't blame
it's
them for
all
trying.
newer stuff.
You know?
But I hope I made that clear. It gets a little bit sticky when you talk about sales and you don't have information. Now, we took all the assets off at the taxpayer's request and put them on the new company. He's right about that. But that's all we know. We don't know anything about the financials yet. Maybe, maybe we'll find out. They certainly could have submitted it. But they
Well, my complaint
didn't.
is, they charge, let's say, 30 cents a MCF. And that's never gone down. It keeps, and then we're sitting here with volumes reserves behind pipe, waiting to go into the system when the price is right. Everybody turns on their gas. And if we decrease their value right here, are we going to be able at some point in time to bump it up because of their volume? I
Well,
don't think so.
I'm an old Tenneco hand. So I worked for Tenneco for a long time, and then I worked for me and a gentleman named Roy Rimmer down in Benbrook, Texas, formed our own little company and worked. Now, he was the majority, I was the peon, and I had a little money invested in it, and was the field manager and worked that. And in the 15 years that we operated pipelines, transporting our own gas, admittedly, that fee never changed.
Yeah.
Never changed. It was 65 cents a thousand is what it was. That was higher than the norm. The norm was about 55, but again, it was our pipeline and we had to recover some of our costs to get it back in service because it had been out of service for 12 years. So we did charge ourselves a little bit more money, and ultimately, who paid that price? The royalty owners paid it. But that gas didn't have any market for 12 years. So they were kind of happy they were starting to get some money again too. So it's kind of one of those things. But those prices very seldom change. I thought he was going to get to it, but he just wouldn't say it. But they just don't change. He just wouldn't say it.
No, I've never seen a reduction.
as hard as you
Yeah.
tried to pin him down to get an answer.
Yeah.
Yeah, he wasn't going to say that.
He wasn't
But-
gonna tell you anything.
Now, that's my experience. Is that the Bible for everybody? I don't know.
He asks those same questions every time, and they never can. I've always just felt, okay, they go say it this time.
They never-
They never.
When you're talking about
Exposed.
midstream absence,
They never
that's
do.
an excellent question, because that goes to, it's kind of like owning a pawn shop. You're protected in the bad times, and in the good times, you're just making more money.
Let's go. Please.
Well said. Do I have a motion to adjourn?
So moved.
I second
All in favor?
that. Aye.
Aye.
Thank you.
So